Hello guys, I'm Konstantinos. This is Crypto Unplugged, and this is actually my first ever video on YouTube, um, where I intend to share some of my thoughts and ideas on cryptocurrency. Um, and yes, since this is my first video ever, please bear with me. There's a lot of things going on. I'm planning to do this without script, without so much pre-planning. So I might get some gaps in the flow of how I speak, like now. However, I believe this can be quite effective because in the long run, I would like to be able to jump in the information in the markets straight away, and particularly as now the market is about to heat up, so things are happening very quickly, and I don't want to lose time preparing a video as the market is not going to wait for us. So I'm gonna start straight with the chart. I have the Bitcoin chart open, and I'm gonna start talking, showing some things in the chart. I believe in crypto market. There are a lot of people with a fundamental approach to the market, and there are others that are very technical and they have like a very technical approach. I started as a fundamentalist, however, diving more and more into technical analysis. Now I see myself in the middle. I cannot be full on technical, I cannot be full on fundamental, and I try to find ideas and scenarios that work from a fundamental aspect but also from a technical aspect as well. And I'm gonna start with that. For example, now as the market is rotating towards a bullish bias, there are a lot of people that expect 200,000, 300,000 Bitcoin. However, even though fundamentally that could make sense, from a technical point of view, this might not make so much sense. So this is one point that I'm trying to find the sweet spot. So I would like to talk about what has happened recently, after the aggressive expansion that we got on Trump's election up to today. So since March, what effectively happened here is we had a bit of a distribution model that turned into an accumulation one. And so I'm gonna always refer to concepts and ideas that might not be clear for everyone, because I understand that there might be very different levels of you watching. So from absolute beginners in cryptocurrency to people that are very deep into technical analysis. So I'm not gonna explain everything that I say on the spot. However, over time there will be explanations. One of the basic concepts that I use is the Wyckoff accumulation and distribution models, which is here. So the Wyckoff accumulation and distribution models are schematics that work within a range, and are based on and driven by market makers when they want to distribute the price, or then towards the low end of the range, and then they accumulate to send the price higher. So a typical Wyckoff accumulation schematic would have 3 taps on the low of the range before they send the price higher. And this is what happened here in end of February and then March, and then third up in April. However, this is not. This has not been very clean. This has not been a very clean accumulation schematic, and the main reason was the time displacement between the top 1 here, top 2, and top 3. So typically you want the timing to be more evenly spaced. Another thing is that once you have 2 taps here, the third tap can be lower than the second tap, or it can be higher. You don't have to necessarily sweep the second tap. So I think when we were up here, there was a lot of confusion of what might happen. Some people already expecting higher prices. Most of the people were expecting a drop to below 44,000, below 74,000, all the way to maybe to lower 60s. And it was very hard for people to position here. So I think what happened is that the price came down for the third tap without mitigating the demand here below. So while it was expected that we will tap into this demand, and everyone was expecting that, we front ran that, and then the price rotated back up, and then last week or the week before we started having this aggressive expansion to the upside. This is a concept that these things work very well for market makers because effectively everyone was expecting to take long positions in this demand zone. Also, whoever was short here would have probably the final take profit zone down in this demand zone. So it absolutely makes sense for market makers to front run that. This is what works best for them. And then an aggressive expansion doesn't give the chance for people that are sidelined to take positions. However, the fact that we didn't tap into this demand might make this whole model a little bit unsustainable in the long run, which means that now I'm basically targeting new all-time highs. However, I'm not targeting 150 or 180 or 200 plus thousand Bitcoin price. And I'm not saying that it's not going to go there. However, what I'm saying is that for the time being, I'm expecting a new all-time high, at which point we will have to reevaluate again. I wouldn't be surprised if I see a new all-time high within the next month or so, and then an aggressive pullback, and then another expansion later on in the year. But this is just an idea. There are a few ideas, but the expectation for now is that we go towards a new all-time high. I believe that a lot of people that, especially ones that are newer in the market, probably they didn't buy the lows here, and probably they got caught on surprise with this aggressive expansion, and now they wonder whether they should buy crypto now or not. I would say that this is a little bit of a tricky point now. It absolutely makes sense for the price to come back, or it can continue up. And this price action in the last few days, it's very unclear. So we always say that crypto investing is a game of probabilities, and I believe at this point, personally, I cannot put the odds in favor of one side or another. But this is in the imminent short term because what has happened is that we got this accumulation model, which is confirmed because now we have also a break of structure on the daily. So now we have multiple actually daily closes above the previous local high. So before we used to have lower highs and lower lows. Now this was the first time that we got a break of structure, which means now the expectation is that at some point we will get a pullback which will form a higher low, so a pullback higher than the 76,000, which will then continue the trend to the upside. I think it is very likely that the price will not pull back below this 90,000. So now we broke back into this previous range. So the price might deviate it, but I don't expect to come much lower. Also, we have this inefficiency candle. When typically you see aggressive candles like that, price tends to come back to fill at least half of this candle. So the price coming back to the bottom of this range around 90,000 would still be in the range, would fill around 50% of this inefficiency candle, and then will continue. I think this can be a likely scenario, but it's very hard to assess now. So whether you should buy now or not, I have to say that the expectation is that the price will keep going higher, at least to a new all-time high. So if you buy now, there is a chance that you buy and then immediately after you buy, price comes back and then it continues up. So don't freak out if the price comes back, because eventually it will go up, or you can wait until we have the pullback. If you wait for the pullback, maybe you decide to wait and then the price pulls back and then you find a nicer entry and the price goes up, or you decide to wait and then the price doesn't pull back, it can go very aggressively up and then find, I don't know where the next higher low, which can be actually the same or even higher than this price. This is now, guys, for I'm referring to spot buys, because I think you shouldn't enter leverage trades at this point. I did enter some. I did enter a very small trade on Griffin, just because I'm taking a bet on the chance that we are forming this triangle here and that the price squeezes and it can go up. So I think that we can have like a big candle up, but this is like, as I said before, it's almost 50-50 the chances. So I open a very small position, very risky one. I'm fully aware that it can get liquidated, and this is it already goes against me. Just because I also had the confluence of the stochastic RSI. So the 1 hour stochastic RSI is still going down, so it hasn't bottomed yet. However, the 4 hour has stayed in the bottom for quite a few hours, and it is the same on the 8 hour, and then it's bottom on the 12 hour as well. The price has pulled back 20% from this local top here. So I think this can be a small pullback to rotate back in another push. This is really a small position, so I'm not I'm only mentioning this just to give you an idea of things that I'm looking at, like the stochastic RSIs and how I think. But this is like it's a trade because I'm in the mood of taking a trade and trying to play out this aggressive push if it happens, but it's not a confirmation. Also, I have established some very nice trades. I have a very nice trade on Say. So I have, I think that the entry here is very safe. I feel that there is not a real chance of this trade coming all the way back down, so I don't expect a lower low. Yes, Say can come back quite lower, however, it's gonna create a higher low for the higher high. So I have the Say one, I have the Sui one. Again, I think with an entry at 2.05, I feel quite safe for expansion. And then I have a few more trades. I'm on Zoop, and I'm just showing now the trades that pretty much got the bottom here. So because I have these trades that I feel that they can perform very well, this is why I open very small relative to those positions on things like Griffin. I also opened a couple of days ago a Fartcoin one here, and I don't have a target upwards, so this is like a placeholder. I don't know when I'm gonna exit this one. So I'm not suggesting you enter in Griffin or anything at the moment. I'm just showing you how I'm thinking. So what else? Here I also going to talk about my trade on Bitcoin. I'm long on Bitcoin here. So I first bought on this sell-off end of February. So I bought just under 82,000. So somewhere here. So when I saw this big red candle forming, I think it had already started bouncing, and I ended at 81 and a half, something like this. However, when you have a candlestick like that, sometimes you just spring away of it and you never come back. Sometimes you come back and you feel all this candle and you actually sweep it, which is what happened. But in this candle, I had the expectation of doing at least 2 more entries if the price goes lower. So I entered 25% of my position here. Then I had an order at 77,000 something, which got filled here. Which brought my average at 79. That was another 25%, and then I had another 50% ready to be allocated. I think my order was at 70 to 600, which obviously this wasn't hit. And then I was even prepared, even if that 70 to 600 would hit, I was even ready to maybe add some margin if the price goes below 70, and if the price goes close to my liquidation levels. I was prepared. I had also some money aside for this worst case scenario to add some margin because I was really believing that we will rotate to the upside. So this is the trade. It's on 10x leverage, which is high leverage. It's the highest leverage that I use. And also, I want to make a comment now regarding how to take trades, because the way that I took this trade and the way that I take a lot of my trades is not the way a professional trader would suggest you doing. So, because effectively here, all the way, I traded expectations. So here I saw this aggressive candle to the downside, which for me it was unsustainable. I didn't think it makes sense fundamentally, seasonality wise, whatever wise. And I always think that, in very big red candles, it's and also the fear and greed was in fear or extreme fear, and I think it was a high confluence to enter. However, a professional trader never trades like that. They always trade confirmations, not expectations. But a lot of times I trade expectations with the consideration of the risk that I'm taking. Again, the same here. I increased my position, and then I was ready to increase again. And yeah, there was a chance that this could roll over to a bear market, and I could actually lose all the money that I invested in this trade, which is also why this is a 10x leverage trade, because I like to take relatively high risk trades on leverage. Because I want to get risky, so I don't want to risk a lot of money. And this is my approach. So a professional trader would expect a break of structure, and a break of structure came just here, and actually it hasn't given you yet the pullback to enter, because now you have a break of structure, so now you have a confirmation, and on the pullback you can enter with a confirmation instead of entering with an expectation. Now, if you zoom in on another time frame, on the 4 hour or the 8 hour, maybe there is a break of structure on that lower level, so maybe you could have found an entry here on a break of structure on a low time frame, with the expectation that this will follow to the high time frames as well. So that's my Bitcoin trade. And another thing that I wanted to mention, if you want to buy, one of the things that I like to do is that when the market starts rallying, there is never like an occasion that all the coins run together. So Bitcoin runs, then some coins follow, actually maybe within a few minutes. Then you have some other coins that they follow within a few days, a few hours, and then you have some coins that they follow within a few days. So when everything starts getting very green, I come here on my watch list and I try to see what is not green yet. So whenever I see, so now, okay, today is not the day to showcase that. But yeah, when it's green, I immediately come to here to see what is still red. For example, I'm in a few coins, AI coins on Ethereum. One of my favorite ones is lately XMW, which I enter much higher here. However, I double down just under the 200 MA line, and then I caught the breakout here. However, there are coins that haven't pulled this aggressive move yet. I think Hasai is one that pulled back, and I think it was Pinlink that was still consolidating. So you see, you have so Bitcoin moved, and then some AI coins moved. One of them is XMW had this aggressive expansion, and then you had Tars AI with this aggressive expansion, and I don't remember. Spec I think did well for a few days here, putting some green candles here, but then you had this thing, Destra Network, still consolidating, and then you have Pinlink, which is probably more of an RWA play rather than AI, but I think it captures both narratives. It's still consolidating. So I have a list of coins that I like. So for me, Pinlink, Destra, Hash AI, XMW, OXO, these coins are more or less on the same basket for me. Maybe I like one a little bit more than another. However, I see them as coins with similar risk profile, similar strength when it comes to fundamentals, technicals, etc. So once the market goes aggressively up, I see, okay, now I cannot buy XMW, but if I have money to allocate, okay, I'm still good to buy Pinlink. Pinlink is consolidating. It has held this floor very nicely. And then if I go to check the stochastic RSIs, 1 hour on the bottom, 4 hour, it's not on the bottom, it's going sideways. I don't know if it wants to reverse to the upside or not, I cannot tell. Okay, 8 hour has gone up, and 12 hour it's pointing down. Okay, I was looking at that 2 days ago, but now because on the daily it is pointing up, aggressively up. It might be due for 1-2 more days of further consolidation. However, it's a floor. I'm very confident that it will follow through. So a coin like this could be an option. And again, I'm not saying go buy Pinlink. I'm only sharing some ideas of how I think. And I think I'm gonna keep it here for this first video. And yeah, I don't know how many views this can take. But if you guys saw the video and if you stayed here till now, first, a massive thank you. And second, if you have any comments of the overall thing, please put them below. A feedback, would be gold for me. So I don't know if I talk too much, if I repeat myself, if the video is too long, if I explain things too much or too little. So and any comments on any of these things would really help me. And yeah, I will try to keep this going and see where it will take us. So thank you again for watching, and I'll see you in the next one. Bye bye.